This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Welcome back. There were about 1,700 properties auctioned on Saturday, returning a national clearance rate of about 63%. Now, Sydney held 682 auctions with a clearance rate of 59.5%. There were a further 1,700 private sales across New South Wales. Melbourne held 652 auctions with a higher clearance rate of almost 72%. There were also 1,328 private sales in Victoria. Brisbane held 75 auctions, clearance rate of 60%. There were also roughly 1,000 private sales in Queensland. Adelaide held 46 auctions with a clearance rate of about 74%. There were also 270 private sales. Canberra held 40 auctions with a clearance rate of 62.5%. There were also 107 private sales in the ACT. Perth held 3 auctions, with one of them selling. There were also 543 private sales in WA. And Darwin held 2 auctions, with both selling. There were also 46 private sales in the NT. Well, let's bring in here Angus Moore from REA Group. Angus, thanks for your time. Clearance rates seem to be holding up pretty well, despite us being a few weeks into winter now.
Yeah, thanks for having me, Ed. That's right. We're seeing fairly solid clearance results at the moment, kind of across the cities. Obviously very light volume in some cities, as we'd expect to see in winter. But even in Sydney and Melbourne, which are, our deepest and most liquid markets, particularly for auctions, we're still seeing pretty solid results. Melbourne particularly, this weekend was actually pretty solid and a bit better than we have been seeing. Of course, as you say, we are in winter. It is on a bit lighter volume, so you wouldn't necessarily read too much into it. But it does suggest that we're still seeing pretty good conditions as we kind of come out of autumn and head into winter.
Yeah, and when they do sell in those cities, are there any places where prices are actually going up pretty strongly?
Yeah, I think the big story this year in terms of what we're seeing in home prices is that prices are actually growing and growing pretty quickly in Melbourne. And that's a big turnaround from what we have been seeing. Melbourne's been a very sluggish market basically since the RBA started raising rates, and even really for the couple years prior to that. In fact, home prices at the moment in Melbourne, even though they've been growing this year, are actually still lower than they were when the RBA started raising rates, which kind of tells you how soft the past 3 years have been. So that's been a big turnaround that we're now starting to see some fairly brisk growth in Melbourne now.
One big part of this, of course, is the construction sector and the development of new homes across Australia. We know the government's tracking, hoping to build 1.2 million homes in 5 years. How are they going with that target?
Yeah, look, it is still a bit early to say, but I think hoping's probably the right word. At the moment, the numbers that we're seeing are just not tracking anywhere near where we'd need to be going to hit that 1.2 million. To kind of put it in some perspective, we get data on building approvals, which is, right at the start of before construction actually begins. And what those are suggesting is that we're about 3/4 of the pace we would need each month to be hitting that 1.2 million over 5 years. So still well behind the pace we need. And really the big difference in what we're seeing and where we're not seeing enough building at the moment is in higher density. If you wind back 10 years to the middle of the 2010s, we were actually building quite a lot and, basically on track to hit that 1.2 million at some points. And of course, 10 years ago, Australia was a lot smaller. And the big difference then and now is that we were just building a lot more high density, particularly in New South Wales, Brisbane and Melbourne.
All right, we've got a chart we can put up on the screen showing construction employment by subdivision. What's this telling us?
Yeah, so we've been talking about the fact that we're not on pace to hit those building targets. Part of the reason for that is it's just been hard to build in the past 5 years. It's been a very challenging sector. One of the things we've seen is that the time it takes to build a house, detached house, is actually blown out by about 50% over the past few years, which is a really big increase. This chart here is maybe the silver lining, if you were trying to find a good news story and why we might start to get a bit more back on track for that target, is we are seeing a real surge in building construction employment. You can see there, and that is broader than just resi. It does include commercial and other things, but resi is obviously a very large part of it. You can see there's been a big increase, and a lot of that's coming because we're starting to see a wind back in employment in heavy and civil. So think here kind of state infrastructure projects. As those start to wind down, we're seeing construction employment there fall, and that's freeing up labour to flow into the building industry. Now, of course, they're not perfectly substitutable. The types of things that we need to do to build a tunnel versus we need to do to build a kitchen are quite different, but there is some substitutability of labour between those two areas.
Angus Moore, Senior Economist at REA Group. Thanks for coming on the show.
A pleasure. Thank you so much for having me, Ed.